Still pays off. It does. It pays off. Things work out if you work hard. Okay, anyway, I want you to look at page 215 in the book. 214 and 215. There are two comprehensive problems. Actually, two comprehensive problems. It's too hot to carry my book. That's what this fellow up here. A couple other people come on this, right? It's too hot to carry my book. It wasn't too hot to carry it. Yeah.
I drove mine.
Oh, you drove. Okay. Yeah. Anyway. All right. Anyway, what does this thing do? It gives you an opening balance, right? Everybody see that? Opening balances. Either one of the problems. Gives you opening balances. Gives you a whole bunch of transactions. Those are source transactions. They're transacting business, right? Okay. So what you would do is you would take those beginning balances, put them in T accounts, record all those transactions, write all the journal entries for them, right? And then record them in the T accounts, like it was a general ledger. And then you'd find out what your balance is before you do adjustments, right? This is the process that you've been reading about and working on, right? Okay, this is the process. So now I know what the balances are, and now I'm ready to do financial statements. I'm going to do a balance sheet and income statement. But here's the deal. The accounts aren't right. Why not? I haven't made adjusting journal entries yet. I haven't recorded all my deferrals and accruals yet, right? Some of them are recorded. You know, if I sold on account, I debit accounts receivable and credit sales, that's recorded, right? The deferral might be recorded too, debit cash or credit earned revenue, right? But related to that revenue stuff, what do I have to do at the end? Might there be some receivables that aren't recorded yet? And I need to debit or receivable and credit some sort of revenue. Yeah. Might there be a situation where the unearned revenue is too high and the revenue is too low and I have to reduce the unearned revenue with the debit, right? And credit revenue, sure, okay? Or the reverse could be true, couldn't it? And the same thing on the expense side. Am I right about this? You need to make some adjustments at the end. Okay, so what the adjustments are, after you know those balances, right? The adjustments are where, see at the bottom there of the page 214, data for adjusting entries, and they do L through P. That's a bunch of adjusting entries, which are the ones you've been working on, right? So we've done these transactions in chapter 1, 2, and 3. We've done adjusting entries in chapter 3 and 4. You did know I was covering 3 at the same time as 4, right? And it's all the same stuff. Okay. Anyway, you've done all these, but it's just putting them together here. This is a really nice exercise to do. And what we'll do is we'll go through a full one in the review we're going to do. When is that? Wednesday or something? Because Monday is a holiday, because we really need one bad. I don't know about you, but I'm really tired. That's why I'm kidding. But anyway, yeah, we need a holiday. Well, we should honor the holiday. And we will, okay? So, but anyway, so after you do your adjustments, what do? You get them all done. Now you think all the accounts, all the assets, liabilities, and equities have the right balance there. That's what you think at least, right? Okay? So then what do? No, don't close yet, but you will soon. What are you going to do first? Prepare your financial statements. Don't close first or all the balances on your income statement will be zero, right? Okay, now when you do your statements, it asks you to do a balance sheet and income statement. Don't worry about the cash flow statement. That's for a balance sheet and income statement there, right? Oh, and don't worry about the ratios either. At the bottom of the problem it says ratios, cross those off. We'll do ratios in a chapter at the end and cross off cash flow statement with a half one. Okay? You're going to do a balance sheet and income statement, which is just copy the numbers out of your T accounts, right, guys? Put them in the right form. Make it look good. Okay? Could I, on a quiz or on a test or on a final, have you do a balance sheet and income statement? Absolutely. I won't have you do a problem like this for a quiz or a test or a final. I do that to intermediate students. Because if you make any mistakes on the way, what happens to you? It explodes, right? So what I'll do is I'll give you a closing, trial balance, an adjusted trial balance. You do financial statements from that. I might give you this opening trial balance and have you do source journal entries, right? The transactions. I might give you the journal entries prior to adjustment, right? And give you adjusting entries, and you make the adjusting entries. I'll give it to you in pieces afterwards. But this is really cool. These two problems, if you work through these, pound on it, it'll take a while. Work all the way through, and you'll see the whole model, guys. It'll just fall out in front of you. It's like, okay. And you know what the whole model is? Debits equal credits, assets equal liabilities plus equity, revenue less expenses is netting. Oh, by the way, when you're doing your balance sheet, will it balance if you don't take up the current year net income? No. That's the most common error people make, right? Why do I have to pick up the current year income? Well, I might have debited cash and credited sales. The credit's over in the income statement. It's not in retained earnings yet, is it? I've got to add that credit to retained earnings effectively. Or debit accounts receivable and credit sales. Same thing, right? Everybody good? Or debit unearned revenue and credit sales. In any event, the sales is over on the income statement. I haven't closed the books yet, so I've got to pick that up. How about all the expenses? Same thing, right? I get debit salary expense and credit cash. I get debit salary expense and credit salaries payable, right? I get debit salary expense and credit prepaid salaries. One side of each one of those entries is going to the balance sheet, the other side is going to the income statement, huh? I've got to pick up those expenses, which will be in net income. Everybody sees this picture, what's going on? So you know that you've got to pick that up. So you start with the beginning retained earnings, add the income or subtract the loss, right? And what else do you need to reduce retained earnings by if there are any? Dividends. Got it. Dividends. How many of you had that answer in your head? You're not getting there yet, right? Real important, right? Can you have a beginning retained earnings, all your incomes, less all your losses since you started the company? Right? Starts at zero, right? As you earn, can you pay some of that out to the owners in the form of a dividend? Sure. So what's ending retained earnings for any company? If you look at retained earnings on the financial statements for any company, what are you looking at, guys? All their income since they started the company, less all their losses, years they had losses, right? Since they started the company, less what, everybody? What they paid out to the owners, which is called dividend. That's it, okay? So we're good, huh? So they give you a dividend, fine. Take it out of retained earnings. Is there such a thing as dividends expense? That's absurd. I made a profit and then I decided to take some out and I call that an expense. How is me taking some of the profit out of the business reducing my income? How is that a cost of getting my revenues? It's not. You just decided to take some out, right? Okay? All right, cool. So, I'm serious. What do you guys want to do today? You got some problems you're working on that you'd like to work on? You want to fly through one of these adjusting ones? Because I did a few, but I used them for what last time? I only did a few transactions, didn't I? What was I really using them for? To get you to understand what you're doing, right? You can watch, I can work these really fast. I don't have to say anything. I can just write them down and we just keep going. It doesn't do you much good. That doesn't do you any good to do that either, or just copy what the office doing. But if you'll think about what you're doing, you can do anything. So anybody got a problem that they like to work on? Yeah.
We guys do the practice quiz and like the last setting up the journal entries on the last part of it.
Sure, I don't care. I don't have the practice quiz. Do you have it? The 3 and 4 one?
Yeah.
I can call it up here. How many of you have it with you?
I don't have a physical
A few do. That's good. That's cool. Okay, let's see. To get to it, oh, I know where it is. I think I've got it on my flash drive, which is faster. I'm so high tech, don't you think, for an old guy? Carry a flash drive everywhere I go. I'm not impressed. Okay, whatever. The first graders on my football team, right? It's not really mine. It's my son-in-law. They aren't even impressed by that. Oh crap! I don't have that in there. Okay, let's see. Let's do it this way. We gotta have the problem in front of us, or you could read the problem to us, but then that's probably not good. Where's Moodle on this thing? There it is. You guys been out of Moodle a bit?
Yeah.
I hate Moodle too, but I love Moodle also. Computers are gonna like that. I wish we had a better program, but this one was cheap. You guys don't pay enough. I'm not kidding. We're a small school. You guys don't pay enough tuition. How come I have to sign this? Oh, you get 50% discount. Your tuition's nowhere near what they advertise. Give me a break. Oh, I know. It's not a discount. It was a scholarship because you're gifted. Okay, whatever. You don't like your scholarship being called a discount, huh?
I'll work it.
Oh, come on. Oh, God. No, they changed it. It used to be Keith R. Now it's K. Richardson. But I think they want Bellerman in there too now. And why do they need me to do that? We don't know where we are.
To convert correct.
EDU. That's who we are. I don't know where we are either. Okay. That stands for me being educated, right? EDU. Yeah, that's right. So you can use it to get rid of me. Let's see. Where is everything? Accounting 101. This is us, isn't it?
Yeah.
finally get there. God, Richardson's slow. It's hot outside. There we go. Quiz 3 and 4. Okay, these are really handy, you guys. The tests are down there too. You're welcome to use those. You're welcome to study as much as you want. Okay, so what are these entries doing? What are we doing?
Adjusting.
No, they're adjusting entries. Okay, go.
Whatever you want.
Quiz 3 and 4. Number 5 on the quiz. Cool. Oh, these are great. Man, there's a bunch of these, aren't there? Yeah, let's do number 5. I'm happy with that. I can even write on here, I think. You used to be able to do that. See if it works when I write on it. No.
You need, I think.
You need to click on the pen on the left side.
Need to click on what?
The pen thing on the left side.
This one? This one. Oh, there it goes. Thank you. Somebody had this in high school. I like it. Either that or they had somebody at Bellarmine who knows how to use this. Oh, come on. It's not going to go backwards, is it? Oh, well. All right. Anyway, so let's try these. Michelle Company, that's my daughter, an advertising firm. She's an accountant, though, financial vice president. Completed the transactions given below. The company's, she was always going to be a teacher, grade school teacher. And she's a junior in college and started working with little kids. And she says, I want to still like kids. She loves her kids. She's a super mom. She decided she liked money and she didn't like kids that well. So, yeah, so she came back and became an accountant. I'm not kidding. Went to school here and took classes from me. That was something. Yeah, but she's smarter than me, so what's her problem? Okay, the company's year end is December 31st. Is that important? Well, yeah. What if I said the year end is November 30th? It's a different number of months to the end of the year, right? That's all. So you can have the year end anytime you want, any day you pick. You should leave now because that's really a horrible thing to do in a class, right?
I've only got that.
Why would anybody care if somebody's phone rings in a class? No, if everybody's rings at once. If mine goes off, though, we're going to all sing the Oregon Fight song, right? Because that's what mine is. I try to remember to turn it down, but if you don't, so what? A chance to make fun of him. The company's year end is December 31st. Okay, they prepare financial statements only at year end. If it's monthly, it changes the entries too, right? Prepare appropriate journal entries. Here we go. Purchase equipment for $35,000, $10,000 down. Sign a note for the remainder. What about all that other information? When are you going to use that other information? When you do financial statements, not when you record the transaction, because nothing's happened yet. Is there any interest yet? No, no time went by. Is there any depreciation yet? No, no time went by. Everybody agree? You have depreciation expenses, time goes by. Of course, it's measuring how much you used up over time. You have interest expenses, time goes by, because you got the use of the money, right? You're using that up, the use of the money. Okay, journal entry, devil what? Let's go, come on. 35. Credit what? What else do you want to credit? For 25. Anybody can do this. Okay, and we're going to use that information later on. We'll come back to it. Okay, March 1st, purchase supplies for $2,000 cash. They put them in the storeroom. Of course they did. They were put them somewhere. This was the only supplies purchased for the year. What a little tiny company. At the beginning of the year, they had 500 office supplies. What does the 500 office supplies at the beginning do for us? Nothing at this point, right? We're just going to add these supplies to the inventory. But when we do our financial statements, what are we going to do? Figure out how much we used, huh? Right? This is a good one to do. By the way, is this just like the problems in the book? Yes. Same stuff. Okay? Purchase 2,000 supplies. What do you want to debit? Supplies what? Yeah, put the word inventory on it, please, so I can tell it from supplies expense or something else. Does that make sense? How much? 2,000. What do you want to credit? They paid cash for them, did they? Yeah. Could I have said on account? Of course. What would you credit if I said on account? Accounts payable. What if I said then we paid off that payable? What would your entry be? Debit what? Accounts payable. Credit what? Cash. Needs to be that fast, you guys. You gonna be that fast for the test? Just boom, 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 boom. When you go to work, you want to sit there and think for 10 minutes about everything you do, or do you want to get something done? You want to know what you're doing, don't you? Okay, well, maybe. Paid rent for the month of March. It's for March. So what is it in March? If you pay it for March. I bet we used it up in March, so what is it? It's an expense in March. What do you want to call the expense? Rent expense. What if it was for next month? Prepaid rent expense. Absolutely, right? What if it was for last month? Oh, then last month what we would have done is debit rent expense, right? And credit what? Rent liability, but we don't call it that. Rent. Word, guys? Payable. We put the word payable on. Yeah. You could call it accrued rent too, which means rent payable. Right? Everybody good? And then when you pay it, what would you do? Credit cash or debit what? Rent payable. Yeah. You guys are there. You guys are there. Just let yourself think about it. You can figure these out. Okay. So we're paying rent for the month of March. Everybody said they wanted to debit what? Rent expense, because we always increase expenses with debits, don't we? I'm even going to put that on the final. You guys are going to be so happy. What does debit mean and stuff? Okay, anyway, and credit what here? We paid it. What do you want to do? Cash. So far, these are just source entries, huh? Provided advertising services for clients, 130 grand. So we did 130,000 of advertising, 80,000 on account. What does that mean? They're going to pay me later. Okay, so I have a what? Account receivable, good. Okay, asset. And then I got cash for the rest, right? Give me the journal entry. Debit what?
Accounts receivable.
Accounts receivable. If the services that comes to you first, that's the revenue. You credit revenue first, and then do the debits. Just make sure you write your debits to the left, your credits to the right, both the account and the dollar amount, right, guys? And write the debits first and the credits last, just because by definition we do that. Okay, please. Okay, it's easier for me to grade too. I'm lazy. So it's 80,000 on account. What else do you want to do?
Cash.
You got cash, right? Debited. How much? Excellent. And what do you want to credit, everybody?
Service revenue.
Yeah, so advertising revenue or advertising service revenue. Everybody good with that? It's working good, isn't it? 130,000. Is this easy? The answer is yes, if you know how. Everything's easy when you know how. Right? Got open heart surgeons. I told you that, right? Tell me it's easy. Okay. Kind of stressful, but easy. One guy says it's like changing oil. No, just do it. No big deal. Okay. Yeah. I hope, actually, it's probably good that I relaxed about it. Now you wouldn't want to be nervous while they're, yeah. Received 60,000 for clients for work done on a credit basis. Okay. Here's where we did work on a credit basis, right, guys? Now they're paying us. What do they pay us with, of course? Cash. So what do you want to do? Debit cash 60. I think I'm doing way too good a job this semester, and you guys are going to get too higher grades. It'll screw up my whole career. Okay, anyway. It's supposed to be hard, you know, so yeah, it's my reputation. Okay, debit cash. Credit what? What don't I have anymore, everybody? Accounts receivable. Why don't I credit sales? I didn't sell anything. They just paid off a bill, right? I don't have the receivable anymore. Okay? Why don't I credit unearned revenue? I already earned it, right? Just think about what happened. We're not even in, we're not figuring it out. So I think accounts receivable goes away. That goes away. Excellent. And we're keeping track in the general ledger what's happening, right, with all these debits and credits. Account balances are growing and shrinking, right? Every single transaction, millions of transactions a year that they count, right? Hundreds of millions. Okay. Think how many hamburgers McDonald's sells. Oh, man. Okay. Paid insurance of $6,000. Insurance is for 1 year starting July 1st. Okay, what date is this thing?
June 30th.
June 30th. It starts July 1st, huh? It's got to be a prepaid. We haven't used any yet, right? So prepaid expenses, what kind of an account? Oh, I don't have it up there. There are assets, liabilities, equity, revenue, expense. I have the right to have insurance coverage in the future without paying for it again. What do you think I got? An asset. Something I haven't used up yet, right? And what do you want to call this asset? Prepaid?
Expense.
But they said I wouldn't call it. You know, there's prepaid salaries, prepaid rent, prepaid interest. You're not going to call all of them prepaid expenses, probably.
Yeah, prepaid insurance.
Let's call it prepaid insurance. And if you want to put the word expense on it, that's just fine. But it's still an asset, right, guys? Most people don't put the word expense on it, but they could. It's like unearned revenue. You could just call it unearned rent or unearned rent revenue. You don't have to have the word revenue on there, just so you know what it is, right? Unearned rent revenue. Same with the expenses. Some people put the word expense on, some don't. Got it? Okay? But we want to call it what it is. So, yeah, do you want to debit or credit that, you guys? Debit. Prepaid insurance. And I don't mind putting the word expense on there because that's what it is, but it's an asset, right, guys? It's not an expense, it's an asset, of course, right? Prepaid expense. Okay? As we use it up, what are we going to do?
Credit prepaid.
Credit the prepaid because the asset goes away and debit what? I used it up. An expense named insurance expense, of course, because that's what it is, right? That in there, okay? And what I pay for it when I give them cash. I don't know how to get a prepaid without doing cash, so please don't debit a prepaid as credit a payable. What does that even mean? You didn't pay it if you credit a payable, would you? Okay, now it gets hard. July 31st. Pay the first payment on the January 31st note from above. How many months have gone by? How many months is that, you guys? January 31st, February, March, April, May, June. 6. There's no January in it, it's January 31st. February, March, April, May, June, and July. It's 6 months. I gave you 6 months. And of course it's 6 months because what did it say up above, you guys? I could have just said they paid it on the date that it was due. January 31st, and it says they're making what? The note bears interest at 6% per annum, that means per year, and is due in 12,500 payments plus interest. So it must be every 6 months, huh? Right? Okay, you got it? Oh, yeah, there it is. The payments are due every 6 months. All right, so we're going to pay 12,500 plus interest. Now be careful. Did we borrow 35,000? No. How much did we borrow? 25,000. So please don't pay interest on 35,000 if you only borrow 25. Your boss is going to be real upset with you if you actually write the check and send it to the bank, right? Why would you pay interest on your down payment? You don't have to do that, right? So let yourself think. Every problem's different. You know what? Every business transaction is different in the real world, huh? So all you have to do is figure out what happened, and then you can write it down in a journal. So what's going to happen here is time went by, and we have incurred what? Interest? Expense. You bet. And now we're paying for it, right? And we're only doing annual financial statements, so we don't have any accrual of interest here, do we? We're just going to pay it. So let's figure out how much we're going to pay. Okay? So this is where it gets tougher. All right, what do we do then? Paid the first payment on the January 31st note from above. How much did we borrow, everybody? 25,000. What's our interest rate? But that would be for a year, right? So it's only half a year, right? You got it. So it's only 3%. So take it times 6/12, divide by 12 months and take it times 6, right? Obviously that's 3%, right? What's 3% of $25,000? 375. Everybody agree with it? I don't know what it is. Okay, I trust it. Okay, somebody else got the same number? See how much I trust it? No. Got a class, why not? Okay, we got it? So how much am I going to give them? 12,500 of principal plus 375 of interest. Everybody agree? So what am I giving them, by the way? Cash. It's an asset. You have less. What do you want to do to it? Credit it for 12,875. Debit what? Don't call me sir. My name's Keith. I'm not retired yet. When I'm a tottering old man, even worse than now, you can open doors for me. You can't now. Why not? But you can open doors for me. You should open doors for anybody, right? Right. Convenient or whatever. You don't run in front of me to open the door. That's what it's all. Okay, but you know, you can open doors for me. You know, you can say, sir, God, you know, whatever you want to do. Thank you for making me rich. You know, whatever, right? Whatever you want. But in the meantime, first name basis with your boss, not your boss. Got it? Okay. And you did it. You did it, everybody? Man.
Yes, Keith.
Just there we go. Good. Your grandma's rolling over. Well, she's not dead yet, is she?
No.
She's just pissed at you. Yeah, your grandma's dead. Okay. I was going to say rolling over your grave, but no. Okay. Your great grandma is then. Tried to train you to be a good kid, and Richard is screwing it up. Okay, so paid the first payment. What did we pay off, you guys? What was it?
Interest. Not payable.
Okay, I'll take interest expense. That's okay. What's the interest? And it's a debit because it's an expense. How much was that?
375.
Excellent. Okay, and then what else are we paying off? Of course, what's the other 12,500? Notes payable. Big deal. How do you reduce a note payable? Well, by paying them cash. That's true. How do you reduce the account note payable? With a debit, of course. Yeah, this is working good, isn't it? Don't you like those little rules? Debits, credits, left, right stuff. Works good, doesn't it? Okay, we did that. Good. That was a hard one. Received advance payment of $40,000 from clients for services will be delivered in the next 6 months. Okay, that came in October 4th. What do you want to do? What I get? Debit cash. This is easy, isn't it? Okay. Credit what? Is it advertising revenue yet? Of course not. I didn't earn it. Unearned revenue. What kind of unearned revenue? How about advertising revenue? You like that? Unearned advertising revenue, something like that. Because we might have all kinds of different unearned revenues, right? Different things we're selling. 40,000. I haven't earned anything, have I? What kind of an account is cash? It's an asset. I debit it to increase it. What kind of an account is unearned revenue? Liability. Good. That was pretty quick. That's getting better. Okay? Right? And you don't have that memorized. You understand, don't you? I haven't earned it yet. I owe them the work. Right? Good, good. December 31st, employees who earned $35,000 has not been paid or recorded. By the way, we're now due to December 31st. What's year you're in? December 31st. What do you bet most of these things, if not all of them, are what? Adjusting entries. Now, it could be we had a transaction on December 31st too, right? You can buy a piece of equipment or something on December 31st. We do things that day. We don't just stop doing stuff, right? But I bet these are going to be all adjusting entries, huh? So let's do them. Employees have earned $35,000 that have not been paid or recorded. Employees have earned. I used up their work. What do I have? Salary expense. How do you increase expenses? Debit. So it might be salaries or wages expense, either one. People who make so much per month, the same amount every month, is called salaries. It's a salary. People who work hourly, it's called wages, right? Hourly wage. That's it. Some companies have an account called salaries and wages, or wages and salaries. Got it? So I'll take either one for this one. Debit. How much? If I paid him, I'd credit cash, wouldn't I? If I had paid him last month, what would I be crediting now? If I paid him in advance, it would have been a what? It would have been an asset named prepaid salaries. Excellent. Okay, and now if they were earning it, I would debit salary expense and credit what? The prepaid salaries to go away. But in this case, what am I doing? I'm going to pay them later, so I am accruing it, aren't I? So debit salary, wage expense, and credit what for $35,000? But I wouldn't call it an account payable because it's not with a vendor. It's with employees, so I'd probably call it what? What's that? No, they have earned it. This one they've earned, and we just haven't paid them. This is not a deferral. This is an accrual. It is a payable. I like the word payable, but I wouldn't call it accounts payable. It's a liability. I have more. I owe them the money, right? Wages. Wages. Salary and wages payable. What do you think about that? Okay? It's accrued liability. You could also call it accrued salaries if you want. It's a liability. Okay? Not accounts payable. All right? Everybody good? Man, we're moving fast today. Is it really only 12:30? Man, you're probably not learning a damn thing. Are you getting this?
Yeah.
It works, huh? Is it going to pay off to get these things out and really crank on them? And don't just do them, right? Think, think, think. And then practice and make sure, you know, after you do something like this, you go back and do some homework problems, they're going to be a joke, right? Boom, 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 boom. Really fast after you know what you're doing. And you'll have real confidence when you go and take that quiz, and then later when you take the test, right? You'll know what you're doing. It's okay. And by the way, do you have to get everything right to do well in here? What if you get 3/4 of it right? A minus. You're good, right? Well, pretty good. Yeah. Okay. What do you need for a C? Is it 50? Yeah, what an easy class. Yeah. Low expectations. Yeah, right. I could write quizzes and tests where the average is 10% or 90%. Be easy, right? I do 100. So you write your name down. Come on.
You wouldn't like a quiz like that.
Yeah, you good. I've actually given credit for the name before. You want to have the right number of points. I do that every once in a while. So be watching for that. Or I'll just throw in what does debit mean once in a while. You know. Need another point after I beat you up for the other 29. Okay, anyways. They count supplies on hand and compute their cost as 700. All right, what do we want to do? I bet I used some. What do you think? And they haven't recorded it because they put all the supplies in what? When we bought them, what did we put them in, you guys? In an account named supplies inventory. There's the 2,000 coming in. You guys see that right there? It's that entry right there, right? So we know we added 2,000 to the supplies, and what did we start with the supplies? 500. So how much do we have available? 2,500. What's left? What don't we have? 1,800. Brilliant math skills, you guys. Okay, so 1,800 we don't have. What do we do with them? We use them. What did they become when we used them? An expense. Not debit expense. Or I'm sorry, not credit expense. Debit expense. I thought I heard credit. It was just supplies expense. Okay, let's write this down. So make sure you do math right. Supplies inventory. What did we start with, everybody?
500.
What did we buy? How much do we have available? 2,500? No. We started with 500 and we bought 2,000. We have 2,500 available. What do we have left? 7. Good. Okay. So if I had 2,500 available and there's 700 left, how many are not there? 1,800. We got it, don't we? I no longer have the supplies inventory. What do I want to show on the balance sheet? 2,500 or 700 if I only have 700? 700. Where do I want to show the 1,800, of course, seeing as I used them up? It's one of the costs I incurred to get my revenues. It's supplies expense. I want an expense on the income statement, don't I? How do I make that happen? What do I debit?
Supplies expense.
Yeah. Don't get tired now, you guys. We're just getting to the hard problems. Okay? Supplies inventory, 1,800. Don't be thinking about how nice it's going to be when you leave this room and get away from me. Just concentrate on this. Okay? Debit supplies inventory and credit what? Whoops. Did anybody notice that was wrong? Oh, I can't erase.
There's an erase button.
Is there an erase? Where is it? Oh, there is one. Come on, Keith. I can't erase. Can you tell I don't use this one very often? I have used it before, though. I just have no memory. But I never did. It's not because I'm old. I never did. Okay, supplies expense instead. You like that better? I do too. Okay, debit supplies expense, increasing it. And what don't we have anymore? Supplies inventory. By the way, when I make mistakes like that, if I just go ahead with it, switching things around like that, don't let me. Because what will happen is you'll write it in your notes, we'll have it in a video, and then you'll look at it, it'll drive you crazy. That's wrong, that's wrong, that's wrong. Every once in a while, a student will call me and say, Keith, you said in a video this. Did I really? That's wrong. Okay, so people do screw things up, right? When your boss makes a mistake once in a while, what do you need to do? Correct them, for heaven's sakes. What do they have you for? Keep them out of trouble, right? Absolutely. They're moving fast, thinking fast. Not that I do that. But. Okay. Completed 25,000 of work that were paid to do an H above. So when we look at H, what happened? When we look at H, what happens? We have unearned revenue. Now what have we done? Earned 25 of it. So how much have we not earned? The other 15. Right? So what do you want to show in unearned revenue? 40 or just 15? I think I just want 15 in there, don't you? My balance sheet. What do I want to show additional earned revenue? 25 more, right? So I'm going to add that to the earned revenue. Okay, so what am I going to credit? I earned it. Well, credit unearned? Debit unearned. Okay, I'll state debit unearned advertising revenue. Because now we have earned it, right guys? So we're getting rid of this whole part of that, okay, the part we've earned, 25. Do you see that 40 less 25 is the 15 we're going to leave on our balance sheet? Is that the portion we still haven't earned? Liability still? Everybody got it? Okay, and what do you want to credit if you've earned it? Advertising revenue. What do we call it when we earned it up above? Advertising revenue. What are we going to call it now when we earn it? Advertising revenue. If they give me cash and I do the advertising, what would I do? Debit cash and credit advertising revenue. If they're going to pay me later, it's on account. What did I do? I debit accounts receivable and credited advertising revenue, right? That one entry was bold, wasn't it? If I'm earning unearned revenue and it's advertising, what do I do? Debit unearned revenue and credit advertising revenue. Because it's advertising revenue, right? 3 different ways. 3 different ways. Every revenue and every expense, right? Every revenue can be paid when? At the same time, debit cash, credit the revenue. Later, debit accounts receivable and credit the revenue, right? And then later when we get paid, debit cash, credit accounts receivable. And in advance, debit cash, credit unearned revenue, right? And then when we earn it, debit unearned revenue and credit revenue. How about expenses? Could be at the same time, right? Debit and expense, credit cash. Could be get paid later. Debit what? Expense, credit what? Some sort of a payable, right? Excuse me. Right? Some sort of a payable. Then when we pay it, debit the payable and credit cash. What's the other possibility? We could pay in advance. Debit what? Prepaid, credit cash. Then what? When I use it up. Debit expense, credit prepaid. Did everybody in the room stay with me on that? No. Do you need to be able to do that next time I see you? You got a long weekend, you guys. You can have this wired. You just have it wired. You can be ready for the test when I see you on Wednesday. And I'll just fill in a few pieces for you. Wouldn't that be cool? If you're ready for the quiz, you're ready for the test. Get it? Okay. Just back to back. There's a little bit of people. That's all. Okay. So we're great. Do not waste your study weekend. I think it would be really nice if you had dinner with your parents for an hour over the holiday. And the rest of the time, work. Okay? Work. All right, anyway. Do we need an entry relating to the insurance about it? What about the insurance? You guys tell me. What about this insurance here? Do we need an entry relating to the insurance?
No.
Really?
Yeah, it's an asset that gets used up.
What would you debit though?
Oh, it's an asset. It gets used up. How many said no for crying out loud? Raise your hand. Be honest. Oh, how many thought no and didn't say it? Yeah, a whole bunch. How many said yes? Good for you. 2 people know what the hell they're doing. The rest, 2 people know what they're doing. 3 people don't, but at least they have some courage to say something. And the rest of you, what are you, just hanging out for fun here? Or, yeah. I didn't have anything to do. I'll go to this class. Yeah. Okay. Yeah. What's the deal? He wants to know what to debit it to. What happened? I paid for insurance in advance. I have prepaid insurance, and what happened? Time went by, and every day that went by, I used up some of that prepaid, didn't I? So what are you going to do? What are you going to do to the prepaid, that asset, if you use it up? You're going to credit it. And we'll only do it when we do financial statements, right? That's why we told you this, it's just once a year. If it was monthly, we'd have to do this every month, wouldn't we? Right? 1/12 of the year every month. Okay? So we're going to do the whole year all at once, okay? Whatever was used up this year. So what are you going to do to the prepaid account, the asset, if you use it up? Debit or credit it? You're going to credit it, aren't you? Reducing it. And then what does an asset become as you use it up in an attempt to generate revenues? An expense. What would you call this expense? How about insurance expense? Yeah, absolutely. So I think I'm going to do that. I think I'm going to debit insurance expense. So 2 parts is figuring out what happened, or 1 part is figuring out what happened. Debit insurance expense, credit prepaid insurance, right? The asset. 1 part is figuring out what happened, the other part is figuring out how much got used up, huh? Okay, when did we buy it? Let's be careful with this. When did we buy the insurance? June 30th, right? How much time has gone by December 31st? 6 months. So I think we've used up 6 months. How long was the insurance policy for? 1 year. 1 year. Now be careful. What if I said it was 3 years? Well, then you used up 1/6 of it, right? If it's 1 year, you used up what? Half of it. What if it was 2 years? You'd have used up 1/4 of it. So be careful, right? What if it was 6 months? You used it all up, right? It makes sense? So pay attention. Read carefully. Okay, so anyway, yeah. So if we've got this thing, this insurance policy, right? Now I can't find it. There it is. $6,000. It was 1 year. And half a year's gone by. How much have we used up? $3,000. What should we debit? Insurance expense. What should we credit? Prepaid insurance. Nothing to this, right? You guys good? Okay, then there's really 2 hard ones. Here's a way you can do this, by the way. What does prepaid insurance have relating to this one? We put $6,000 in there, right, guys? How much do we think got used up? $3,000. So we'll debit prepaid or insurance expense for 3. We'll credit the prepaid insurance for 3. And what do we have left in prepaid insurance? 3. What should we have on our balance sheet as prepaid insurance if we used up half of the 6? 3. That's what we want. That's what our asset is. What should we have on the income statement for the portion we did use up? 3. Easy, huh? Okay. These 2 are really killers. These are mean. Do we need an entry relating to the debt in A above? Okay. How much was the debt in A above?
turning out originally, or
Oh, originally or now? That's a great question. It was 25 grand, wasn't it?
Yeah.
But what did we do? We paid off how much of it? 12.5. So how much do we owe? 12.5. So are you going to pay interest on the 25,000 or the 12.5 when you get around to paying interest on the 12.5? Now be careful. When is the payment due? January 1st. The note's January 1st, isn't it? The first payment was July 31st. Or I'm sorry, the note was January 31st. The first payment was July 31st. And the second payment, the final payment, is going to be the next January, isn't it? Everybody agree? So how many months went by? This is what hangs everybody up. Only 5. It's only 5. And are we paying out any cash? No, it's not due for another month. But time went by, so if time went by, what happened? We have interest expense. Every day you have interest expense. We just record it when we do a financial statement, right? And if I have interest expense and I don't pay it, what else must I have? I owe it. What is it? A liability. Named. No, interest expense is the expense. What's the payable going to be called? Keep going with that. How about interest payable? Sound good? Can you believe how easy it is to name these accounts? You know, call it what it is. All right, so what we're going to do is we're going to debit interest expense. Yeah, that's one of the costs I had. I bought an asset, didn't I? Piece of equipment. I'm using that equipment to do what? Generate revenues. Yeah, everybody's got that, right? You got the idea on this, don't you? Okay. Debit interest expense and credit what? Because I didn't pay it. Interest payable. How much? 12.5 times what, everybody? What was our interest rate? 6%, but that's a whole year, isn't it? Times what? How many months? 5 out of 12, right? So all you do is 12.5 times 6% would be a year. Divided by 12, take it times 5, and you got 5 months. How much is that? It's half of 375, which is, I don't know.
$312.50.
312?
Yeah, because there's only 12 months.
Yeah, but the other one was 375.
That was for 6.
Yeah, that was for 6 months. This is for 5.
I know, but we don't owe them 25,000 anymore. We only owe them 12.5.
It's out of 12 actually.
Oh, then we did the other one wrong. I thought you guys double checked it. What was 25,000 times 6%? Guys.
I thought it was 3% because it was 6 for the whole year.
And then divide by 2. So is that 750? Is 25,000 times 6% 750? I don't think so. It's 25,000 times 6%. Back here. What's 25,000 times 6%, guys, for a whole year? We don't owe them 12.5. We're only paying them 12.5. We owe them 25,000. Oh, this was 750. I thought that looked a little funny, but I thought, what the heck? I'll let you guys go. Now, it's 750, isn't it? How many thought it was wrong? How come you didn't say anything? I thought it was wrong the whole time. I'm not kidding either, I did. That's 750, you guys. This is 13,250. Better go back and change that. Your paper there, right? Oh, yeah. You have to pay interest on the whole 20. Are you going to borrow 25,000 from somebody and they're only going to charge you interest on 12.5 because that's how much you're paying? No, of course not. They want interest on all the money they owed you. Or you owed them, rather. They loaned you. Okay, yeah, sure. So then what's this one? This one is 12.5 times 6% would have been what? That's 375. Is that right?
So would that be 750?
What's 12.5 times 6%?
Would that be 750?
Oh, that's 750. That would be a whole year. Oh, then what? 1 month would be 750 divided by 12, right? And then take that times 5. And what do you get? What is it, 312 or something? 312. Did everybody just stay with me?
That's what I said.
I let you.
That's what I said the first time.
Yeah, but the problem was this one.
Oh,
Because if that's 375, this can't be 312.50, right? That's what I was trying to get you guys to see. Yeah, I believe you. It's 312.50. But I don't believe whoever it was that you too? Yeah, all right, okay, anyway. I didn't believe that one. I was just waiting for somebody to say, hey. And when you came up with the 312.50, what should have occurred to you if you were doing this in real life? Wait a minute, that couldn't have been right. Before, I had twice as much borrowed and it was 6 months instead of 5, right? Can't be, can't be. Okay, got it? Key thing that you guys, that we get you guys to think. Man, that's all we're doing at Dawson. Get you to think. We're not going to teach you a damn thing. Okay? You're going to think and learn. Okay? All right, anyway, let's do the journal entry for it. Debit interest expense, 312.50. Credit interest payable, 312.50. The hard part, I think, is actually calculating how much the entry is. Okay, how about for the equipment? What happens to the equipment every day we use it? It gets used up. Its utility value does. And how do we reflect that? With what? Depreciation, and we're using it up, so we call it depreciation expense. Is that right, guys? We do. And what are you going to credit? We don't credit the piece of equipment. It's not really going away. What do we credit? A contra account called accumulated depreciation, right, guys? So how much is all you got to know. How much? What do you think? How much did the equipment cost? Don't tell me 25. How much was it? 35. So the cost is 35. Is there a salvage value? How much? How much is it going to be worth at the end? 2,000? Is that what it was? How much is my depreciable value? How much am I going to depreciate, in other words? 33,000. How many years? 6. It's going to be straight line, right? So could you take 33,000 and divide it by 6 years? Okay, let's do it. How much would it be for a year? $5,500. Is that right? The most common thing people do is they'll debit depreciation expense for $5,500 and credit accumulated depreciation, and then I get to laugh. Why do I get to laugh at them? This is December 31st. When did you buy the piece of equipment? January 31st. Are you going to depreciate for a whole year if you only had it 11 months? Of course not. So it's going to be what? 11 twelfths of it. Take 5,500 times 11 twelfths. Ta-da. How much is that? Going to give you a weird number. Yeah, of course. 5,041.67. That's it. Are you suggesting to me that your head hurts? Early Friday afternoon?
I'm tired.
Tired of this?
Yeah.
Yeah, it's going to be some fun. Okay, let's do some studying. I want you to do one more thing before you go. Do I have 2 minutes? Oh, sure I do. Okay. I'd like you to do the payment on January 31st of the debt. Pay off the debt on January 31st. Write that down, everybody. Pay off the debt on January 31st. We're going to actually use this screen. Okay, let's pay off the debt. What we had was a note payable. Got it. Okay. We had a note payable that started out at $25,000, am I right? And then we paid $12,500. So what's left in that note payable? $12,500. We have interest payable of how much that we just recorded? $312.50. You guys agree? We just did that, didn't we? So you got $12,500 in the note payable, at $312.50 in the interest payable. How much are you going to pay them? $12,500 plus interest, but it's going to be interest for how many months? 6. How much was that for 6 months? Now he's gun shy. What do you think? That was the 375. Remember, 750 on the whole 25,000. 375 for 6 months on 6%, right? Times 12,500. Everybody agree? What's 6% of that? That's 750, right? But it's only 6 months, right, everybody? Half a year, so it's 375. Okay, so how much money are we going to give them? 12,500 plus 375. So I think I'm going to credit cash, don't you guys? For $12,375. Everybody good with that?
Would be.
Oh, 12,875. Come on, Keith. 12.5 plus 375. 12,875, thank you. Okay, debit what? What am I paying off, everybody? Note payable goes away. Debited for 12.5, it goes to zero, doesn't it? Notes payable. So here'd be a new wrinkle I could give you. I have to make these quizzes harder because now I'm giving you these quizzes to study with, so I have to add to it, right? 12.5. Okay, and then what?
Interest payable, 312.
Interest payable, yeah, but it's only going to be the 312.50. I like it because that's all we have accrued, right? That goes to zero. Does my journal entry balance? Of course not. What would 1 month's interest be? What's 375 divided by 6, right? It's 1 month. How much is that? 62.50. And then what's that going to be? Interest what? It's 1 month that has not been accrued. What must it be? Yes, interest expense. And we're there. We did it all. See you guys. Have a great holiday weekend. But seriously, put a lot of hours in. Lots of hours. If you haven't been giving me, 12 to 15 a week, make up for it now. You got a 3-day weekend. Get caught up. Yourself back in shape. Be ready to go. Wouldn't it feel good if on that first test you nail it?
I know it's
Then I knew I bought some.
okay, so I guess.
I'm a company. I have $500 to supply to my store. I put another $2,000 in. I know I did that. Okay. And then at the end I have $700. Plus I have the supplies account for my general ledger, right? G account. Supplies for general ledger. Starts with 500. I have to do it. I know it's 2,500. Right? If I do a balance sheet right now, I got 2,500. I don't want it to be 2,500. I want it to be 700. These are what I know. Yeah. And you don't remember, right? You keep track of it. There you go. Good question.